So as we know, Ethereum has now moved to proof of stake as of September 15th. The ETH merge happened and it moved from from proof of work to proof of stake. So what's going on in the NFT market as a result of this? So just some broader context. As we know, Ethereum is still the dominant home of NFT activity and trading, making up to 76% of all NFT volume. Other chains like Ronin, Solana, Flow combined have the other 24%. So Ethereum still is where the bulk of the NFT activity happens. The successful merge, along with the subsequent updates coming the upcoming months and years, dubbed Surge, Verge, Purge, and Splurge, should help the network protect its head start against competitors that offer cheaper and faster transactions. So something to keep in mind is that while Ethereum has moved to proof of stake from proof of work, it hasn't necessarily implemented the scaling solutions. So the gas fee hasn't necessarily gone down. It is now operating on a more environmentally friendly proof of stake mechanism, but the gas fee again hasn't necessarily gone down. So it might not necessarily again create a huge splurge in the volume of NFTs on Ethereum. That said, as we know, there will be other upgrades coming to Ethereum. Now, whether in the upcoming years it's Ethereum that keeps the bulk of the market share of NFTs or other chains like Cardano, Polkadot, Elrond, whether they start capturing more of the NFT market, that is yet to be seen. Anyhow, so with the merge, we still do have a group of Ethereum miners that have banded together and launched a forked version of Ethereum chain that remains proof of work, and the new chain is called Ethereum POW, ETHW. Now, if we look in terms of the price action for ETH POW, it's currently sitting at $8.35. So it's on a downward trajectory. So these miners are sticking to proof of work. However, it seems that in general, the market is not necessarily on board with that in terms of what people think they want to invest in. Now, what does this mean for NFTs? For NFT holders, this means that they may now own duplicates of their assets, but their value will depend on the level of exchange support and overall adoption of this fork network. The largest NFT marketplace, OpenSea, announced that it would only support NFTs on the upgraded Ethereum proof of stake chain. Similarly, creators of the Bored Ape Yacht Club collection, Yuga Labs, announced that they intend to only recognize licensing and copyright of the collection for owners of the NFTs on the upgraded PoS chain. So if we look at their tweets, so this is OpenSea, the merge is coming. This is actually dated August 31st. So they had announced that they are committed to solely supporting NFTs on the upgraded Ethereum proof of stake chain. We won't speculate on potential forks. To the extent forked NFTs on ETH POW exist, they won't be supported or reflected at OpenSea. Yuga Labs made this announcement also in August. The Ethereum network is gearing up to the merge mid-September, in line with the broader Ethereum community in the event of a viable proof of work fork. Yuga intends to only recognize NFT on the proof of stake ETH chain as subject to the relevant NFT license and eligible for Yuga offered utility. So now, because there is this fork, another fork of Ethereum, the ETH POW fork, they have made, so companies like Yuga and OpenSea have announced that only NFTs on the new proof of stake chain will be recognized, and only those NFTs will have the actual copyright and IP and any associated utility. So what can we see happening as a result of this fork? Competing NFT marketplace Rarible took the opposite stance. Rarible stated it will recognize any copies of NFTs resulting from a fork created in the same wallet address when they were held on Ethereum. Duplicate NFTs may also cause confusion, opening the door to new scams and rug pulls in a space already rife with bad actors. Okay, so Rarible is supporting the NFTs on the proof of work network. So we have a couple of different things that are happening here. So again, the ETH POW, looking at the price action, clearly the market doesn't feel that this is the more sustainable option. And if we do assume that proof of stake emerges as the winning chain, we may see similar dynamics amongst duplicate NFTs that now live in proof of work chain. So we might see the duplicate NFTs also dump. This would lead to significant discounts in the value of NFTs on proof of work network. So this is for the NFTs where we do have duplicates on the fork network. The merge could disrupt many NFT projects that are not ready for the change and are not anti-fragile. Some projects will face problems due to technical issues, and we may face a large influx of scammers. There will probably be more Ethereum forks, which will create more confusion, more scams. As a result of the confusion, NFT holders could lose the original version of the NFTs if they are not careful. This is a quote by Alex. I'm not going to attempt to pronounce his last name. Alex O, co-founder of Misfits DAO. Outlook and implications. So this does open the door for ESG conscious developers and investors to enter Ethereum's NFT industry, and proof of stake still isn't untested as a large network, and it is yet to be seen whether the network can maintain decentralization and avoid institutional value capture over time in which large entities participate in staking and gain a large ownership or share and control of the network. So that has always been one of the argument for people who support proof of work chains, that it is more decentralized. It avoids larger investors, companies to just come in, put a lot of money into staking, and then operate a monopoly. So for proof of stake, that is maybe somewhat the case. So we can see that crypto exchange Coinbase and staking platform Lido control almost 40% of the staking power of the network. Furthermore, SEC Chair Gary Gensler hinted this week that Ethereum's switch to proof of stake network could move it closer to being a security in the eyes of the regulator. So that could throw in some interesting wrenches. Now, coming to this point, something I mentioned earlier is that it is important to reiterate that merge has not affected scalability or transactional throughput, meaning transactional fee for sending and trading NFTs are unchanged and may remain high depending on gas usage and demand. So as we know, these gas fees can get into a lot of money, sometimes even hundreds of dollars, depending on how busy the network is. And that is the reason second layer chains like Polygon, Arbitrum, and other chains like Solana, Flow, Tezos, and Avalanche have become popular. So again, this is yet to be seen how in the upcoming years, whether Ethereum proof of stake is still the chain of choice for NFTs, or do we see more action on the other chains? Personally, I don't think there will be one chain to rule them all. I do think we will see creators build on all chains for different use cases and different purposes. I am a huge fan of other chains like Avalanche and also Elrond. Elrond is a proof of stake network that has adaptive state sharding that, again, is very easy to use, fast, very cheap. So I do recommend you take a look at that. Anyhow, so low transaction fee are important as high fee may price us many NFT use cases in gaming and metaverse. So obviously, if you have in-game NFTs like weapons and skins, but if to trade those you have to spend $20 or even maybe $100, then it's just not sustainable. So we will wait to see how these other upgrades to Ethereum proof of stake pan out. Much also remains undecided about how or if intellectual property rights will transfer to NFT duplicates on forked versions of Ethereum. Most NFT creators will likely only grant rights to holders of NFT in the most widely adopted post-fork chain, likely to be the proof of stake chain. So that's an update on what's happening in the NFT market, or how the proof of stake merge can likely affect the NFT activity on Ethereum. I think we will wait and see. Personally, I do think there will not be one chain to rule them all. So while I do think it's good that Ethereum has now moved to proof of stake, it's more environmentally friendly, more sustainable. We will see how Ethereum rolls out its other upgrades to make it faster and be able to compete with other chains that are kind of already doing what Ethereum is aiming to do, however much of the volume still is on Ethereum. So we'll wait and see how this goes. Thanks for watching. Thanks for listening. Hope you're having a great weekend.